Why are real interest rates important? Have you ever wondered how the economy really works and what drives investment decisions? One key player in this complex world is real interest rates. So, why are real interest rates important? Real interest rates are the inflation-adjusted return on savings or the true cost of borrowing and investing. To find them, you subtract the inflation rate from the nominal interest rate. This adjustment is vital because inflation reduces the purchasing power of money. The real interest rate reveals the actual increase in value for lenders and investors, or the real expense for borrowers. In the context of capitalism, real interest rates are essential for the efficient allocation of capital in the economy. They influence decisions made by investors, savers, and businesses by reflecting the true profitability of investments and the real cost of financing. When real interest rates are high, it signals that capital is scarce and costly. This can slow down investment and economic growth. On the other hand, low real interest rates encourage borrowing and investment, fueling expansion and innovation. Real interest rates also act as a key economic indicator. They reflected the balance between savings and investment demand in a market economy. These rates adjust to changes in productivity, economic growth potential, and risk factors. For example, when an economy is growing strongly with high productivity, real interest rates tend to be higher. This is because investments yield better returns. In contrast, in sluggish economies with lower productivity, real interest rates usually fall. In capitalism, real interest rates help maintain equilibrium in markets by guiding capital to its most productive uses. They impact consumer behavior, business expansion, and the overall dynamics of supply and demand for funds. Additionally, real interest rates influence wage growth, employment levels, and the pricing of financial assets. This links monetary conditions to real economic outcomes. Understanding real interest rates allows businesses and investors to make informed decisions about long-term projects and savings strategies. This ensures that returns exceed inflation and generate real wealth. For policymakers, monitoring real interest rates is essential for assessing economic health. It helps in designing monetary policies that support sustainable growth without triggering inflation or recession. Real interest rates are important because they reveal the true cost and return on capital. They guide investment and consumption decisions that drive capitalist economies. By reflecting underlying economic conditions, they help allocate resources efficiently, supporting growth and innovation within market systems.